But let's also get in a word and hear it out then from Sanjiv Chadha, of Bank of Baroda, decoding the impact of the second wave on NPAs and the outlook on credit growth.
So I think when we have had these conversations over the last year, our guidance has been that we expect that the credit quality should improve as far as the corporate segment is concerned, because the credit cycle has changed. The credit cost should come down, and that credit cost reduction should make up for any stress that might be there in the MSME book or to a lesser extent in the retail book. And our results pretty much bear out that guidance. Despite, again, some impact on the MSME portfolio and the retail portfolio, there's been a very significant reduction in the credit cost as far as the corporate portfolio is concerned, which is why overall credit costs have come down. And we believe that we should see something similar during the current year. It is a fact that the second wave has been unanticipated setback. But nevertheless, when it comes to the large corporate segment, there the impact has been less. The impact on the economy has been less. The lockdowns have been calibrated very carefully. So we believe that in terms of the impact on the bank's bottom line, we should continue to see a lowering of credit costs, which in turn should translate into an improvement in profitability. So I think it's best to discuss first what happened last year, because you might say the second wave is still with us, and therefore the impact is something that will play out over the next few weeks and months. But our stance again was that we would want to grow in line with the industry growth rate, and within that, we would want to grow faster than industry in our chosen segments. So it was expected that the industry growth rate last year would be between 5 to 7%. So we have grown our book pretty much in line with the industry growth rate, which is about 5.5%. But within that, in our chosen areas, we have grown much more quickly. So our organic retail has grown by 14%. Within that, our home loans have grown 11%, car loans 27%. Our gold loan portfolio has grown 35%. So in the areas that we believe that the bank can grow aggressively in a risk-mitigated manner, while keeping our spreads intact, we'll grow faster. But overall growth, we believe, should be in line with the industry, which as per current estimates, should be somewhere between 7 to 10%.